Guys, if you understand taxes, here's what a lot of business owners do. They go, CPA, they must be smart. They do the same thing with lawyers. Oh, he's a lawyer, he must be smart. No, that doesn't mean jack, okay? Today, I'm gonna walk you guys through what kind of business should you be picking. It doesn't matter if you're doing real estate, Amazon FBA, a coaching company, which we do all three of those, or something else. It's so important you understand the different business structure options. And each of these have varying levels of risk, tax advantages, and liability protection. And then if we have any questions along the way, make sure you post them below and we'll answer them for you. First thing you need to know, step number one, what is the federal tax ID and why does that matter? A federal tax ID is simply an ID that identifies you to the IRS. When the time comes, assuming that you are living in the US, you're a United States citizen, you have to pay income tax. And that income tax will go to the US government, and in some states also collect that. The federal tax ID number is the number that identifies you to the IRS so they can say, okay, this identity or this business owes taxes. Now, the federal tax ID is going to vary based on one of the business structures that you choose. There are multiple business structures, and I'm gonna share with you guys the main ones. First of all, the most popular, the most common, you've probably heard it many times, is an LLC. It stands for Limited Liability Company. It was actually started in 1977. It is state-based. An LLC has nothing to do with the federal government, kind of like an S Corp has nothing to do with the state, and I'll explain. In 1977, states decided there were some companies who wanted to have the taxation of a sole proprietorship, also known as pass-through tax, but they wanted the advantage of the limited liability that a C corporation provides. So what an LLC does, it's really unique, is it allows you to have pass-through income. Every time you make money, there technically is no money owned to the government by the company, only by you as the taxpayer. Even if you're a partnership within an LLC, it's the same thing. There could be two of you, it's a partnership LLC. Let's just say one of you receives $500,000, the other person receives $500,000. Each of you are going to pay income tax on what you received. But when it comes to debt, when it comes to lawsuits, anything like that, your liability is reduced greatly when you are an LLC. Why is that? Well, because you filed with the Secretary of State in one of the states in the US, and if someone was to sue you or you had a debt, you and your personal assets are not at risk. There are lawyers in this world, I kid you not, you gotta love them, who their full-time job is to find companies that are sole proprietorships who are selling high-risk products. You know how they make their money? They find an upset customer who had a supplement or something like physically huge risk. They make sure that the company is a sole proprietorship, and then they say, come on, let's get together and let's go sue their butt. And that's how they make money, because that company was a sole proprietorship. So if you choose to be a sole proprietorship and you sell a high-risk product or you make a lot of money, you're a much bigger target than if you're a limited liability company or a C corporation, which has what's called limited liability, where you can only sue the company identity, not the individual.
So I have a question, Seth.
Yeah, go for it.
So does that mean a single member limited liability company is the same thing as a sole proprietorship except for the limited liability?
Great question. So if you are a single member limited liability company, you're still a limited liability company. Mm-hmm. You still have limited liability. But if you're a sole proprietorship, you don't have that liability. So there's a sole proprietorship is one kind of business identity. In a sole proprietorship, you and the company are one and the same. There's no difference between you. In fact, as a sole proprietorship, there's no reason to get an employer identification number unless you're trying to avoid the risk of identity theft. Your social security number is right here.
Your federal tax ID.
Exactly, your federal tax ID. It's the same thing to the IRS. If you are a single member LLC, you're still taxed like a sole proprietorship, but it is harder for someone to come after your personal bank account, your house, your car, your favorite dog. Like, they literally cannot come after your personal, I mean, they could still sue you, but chances of them winning are like almost like nothing, and no lawyer is gonna waste time on that end.
Because the liability is now shifted to the company instead of the individual.
Exactly.
So and that's the only difference between those two company types.
Exactly, and that's where people get really confused. they think in their mind that, well, I have a company and me, we're one and the same. Even just for growing your business, this is so important. You need to have in your mind alone, a separate identity from your company. This is the problem that a lot of new entrepreneurs struggle with. They are so attached. They are so engrossed with that new company that it's hard for them to see it as a separate identity, and therefore they make emotionally driven decisions based on how they're doing in the day, based on a gut feeling impulse, and the company ends up dying, and the company's riding the wave of their emotional roller coasters. But when you treat your company almost like a newborn baby, it's not you. I know it's an extension of you, just like your child, but it's like over here, it's separate. It is a separate identity. Now, what would you do with a newborn baby? Would you allow your emotions to affect how you treat that newborn baby? Hopefully not, especially if they're a newborn. Now, as a parent, I'm sure we can all relate. If you're a parent out there, yeah, absolutely. There are times where you've made emotionally driven decisions and they were dumb decisions, myself included. But with a newborn baby, you can't just decide because you're not in the mood to not be there for the baby one day. They need milk or formula. They need help. They need comfort. They're pooping their diapers. They need their diapers to be changed and their butt cleaned. Like, you have to treat your company like that in the early stages. In other words, no matter how you're feeling, you're still going to be there for that newborn baby. But if you're so tied up with your company as if it's one and the same with you, then your moods are going to wreak havoc on the company. You have to have an objective, professional, separate identity from your company. Now, that's just a mindset thing, right? Mm-hmm. Now let's talk about legally for a minute. Legally, if you're a sole proprietorship, you and your company are one and the same. Your federal tax ID is your social security number. Technically, you could go out and apply for an EIN, but there's really almost no reason because it's not going to change your liability. It's not going to change your taxes.
Do I have to file to be a sole proprietorship, or is that just default?
Great question. It's default. You know what's cool about a sole proprietorship is there's almost little to no money that you have to pay to start. You don't have to file in most states. You just start. Now, are you still liable to pay taxes? Of course you are. But when the IRS sees you, they're going to see you as a human being paying taxes. Now let's switch that. Let's say you're a C corporation. Now we're on the other extreme, right? When the IRS sees you, they see your C corporation as one identity and they see you as another identity. And both of those pay taxes. And that's why they call it double taxation, which I'm going to go deep on in a minute.
So speaking of, the cost to set up, you said you don't have to file anything for sole proprietorship. You don't have to pay anything. You just are by default in most cases. With a limited liability company, is there a cost to set up, and do I have to file to be a limited liability company?
Great question. So as a limited liability company, you do have to file, and you have to file with one of the states. Now, you could live in Texas, but you could file in the state of Wyoming because of tax advantages if you want. A lot of people do that, or the state of Delaware. Probably not California. I don't recommend it. It's like the worst state in the world for starting a company. I love you, California, but your laws suck. Just gonna say it.
So I have an online shoe shop. It's an e-commerce store.
You're selling shoes.
Yeah, online. And right now I'm a sole proprietorship. I haven't filed for anything yet. At what point should I decide to spend between $50 to $800 and file an LLC for my company?
Great. And that's exactly what it's going to cost you, somewhere between $50 and $800, depending on whether or not you ask LegalZoom to do it for you, or you hire a lawyer to do it for you, or you do it yourself. You can do any of those options. LegalZoom is just one example of an online service that can do that for you. You need to file for an LLC in two situations. Number one, if you're selling a high-risk product. I would not consider shoes a high-risk product. You usually don't hear about lawsuits over a pair of shoes. Just usually you don't. But if you're selling baby products or supplements or something that people put inside or on their body, your risk goes up drastically. Someone goes home, they get rashes, they end up in the emergency room, they're probably going to sue you. So in that situation, yes, you definitely need to file as an LLC. That way, when someone sues you, it protects your personal bank account, your car, your house, literally all your collateral that you own personally, it protects you. But your company, of course, is being sued, and that's where you might have to fight the lawsuit or settle. The other situation is when you start to make a lot of money. Look at it this way. How many times do people complain about the shoe company Zappos? You hardly ever hear it, right? You don't. How many times do people complain about Amazon? All the time. Why? Because they're a big target. It's going to happen. Apple gets complaints. Microsoft gets complaints. When individuals get all upset because someone's criticizing and complaining, my response is, Your identity is so tied up in your business, maybe it's affecting you too much. Imagine being a massive company that gets sued all the freaking time. I mean, companies like Apple, they have an entire legal department. And you know what their full-time job is? To handle lawsuits. Did you guys hear about the one with Sony where Sony lost the lawsuit for millions of dollars? So they delivered the money to Apple in a truckload of pennies.
Or was
truck
that
after
Samsung?
truck after truck.
Was it
I think it
Samsung?
was Samsung. Yeah. I was like, why didn't they use dimes? That just would have been so much cooler. Let me give you guys a real quick overview. You're gonna be a sole proprietorship. That's one, okay? You do not have limited liability. You will be taxed, income tax and self-employment tax, full on, baby. Now let's switch to an LLC. When you are an LLC, it does nothing to your taxes. I've had people email me and say, yeah, I'm gonna become an LLC to save on taxes. And I'm like, that doesn't make any sense. All those taxes, what's called pass-through income. In other words, the money goes right through the LLC, kind of like when you eat something that gives you the runs. Sorry guys, I just had to go there. And it goes straight to you. If you're a sole proprietorship, you make $1 million, you will pay the same amount of taxes as if you're an LLC, single member LLC, and you make $1 million. Makes no difference. The only difference is it protects you from being sued, or if you're in a debt, the company holds the debt, not you. As a company, your identity is separated, but as a tax identity, you're one and the same. If you're an LLC, you are invisible to the IRS. All they see right through the LLC and they see you. But to a lawsuit or a lawyer or collecting company debt or taking out a mortgage with your company, they do see a separate identity as a sole proprietorship compared to an LLC.
Okay.
And that's really important to understand.
So let's say, my shoe shop, I get sued and I have an LLC.
Yeah.
So my company is liable. I'm not personally liable.
Correct.
What type of assets can they take from me if they win the lawsuit?
Excellent. As a general rule of thumb, they cannot take your personal assets. If you become an LLC, you need to get a business bank account. One of the most common reasons you need to apply for an employer identification number, kind of like, how Social Security identifies you as a person? Well, an EIN number, employer identification number, identifies your business as an entity, separate from you. So back to your example, what they can't take is your personal bank account, your car, your house, any assets that you personally own. Okay. But if they do win the lawsuit, they can take any of that from your LLC. Now, here's why people have holding companies. This is really interesting. Let's just talk about the film industry for a minute. I find this so fascinating. Let's say you want to start making movies as a film company. You can have what is called a holding company, AKA a shell company, and we'll call it Film Industries, and it's right here. Underneath that, you have another company called, let's say, Bobby McGee's Productions, okay? Because I think Bobby McGee's coming out with a really cool movie, okay? The Film Industries company is the owner of Bobby McGee Productions. Now check this out. What if someone came along and sued Bobby McGee Productions because on the set, someone fell, split their head open, went to the hospital, and now they have a doctor bill for over $100,000. And so they sue Bobby McGee Productions. They can't sue, technically you can sue anything. You can sue any entity, but they're not gonna win. They're not gonna sue the holding company. And if they do, chances of winning aren't, because the holding company isn't the one doing the business. But here's where it gets really interesting. If Bobby McGee is smart, he will have all his camera equipment owned by Film Productions, not Bobby McGee. And Film Productions is leasing that equipment to Bobby McGee Movies. I already forgot the name, but you get the idea. Productions. So if Bobby McGee Productions gets sued, they won't lose their film equipment because they don't even own it. They were leasing. It'd be like you going down to the store and say, hey, I'm gonna lease some camera equipment from you, and you get sued. They can't take the camera equipment. Doesn't even belong to you.
It's a whole separate company.
Exactly. Microsoft does this. I believe Apple does. You probably know better, Josiah.
They do this with their patents.
They do this with patents. So instead of Apple owning the patent, they have a separate company that owns the patent, and Apple leases the patent from the company. That way, if someone wins a lawsuit against Apple, they can't touch the patent. That's what a shell company is. I know when people hear shell company, they think, fraud, scam. There's lots of that goes on. After Microsoft got really, really good at finding legal loopholes in the system and saving a ton of money by having all these offshore companies, well, then came out this thing called Subpart F. It gets super complicated. I'm a nerd. I love this stuff. We studied this a lot. Basically, long story short, it's why it's so difficult. If you live in the US as an American citizen and you have an offshore company, there's almost always no tax advantage. Now, let me say something really quick. I'm not a lawyer. I'm not a CPA. My CPA is the same one that does Robert Kiyosaki's taxes, so you have a lot of good information for you. You need to check everything with a CPA or a tax lawyer before you do any of this, but I'm still going to share it with you the way it is. So we have a federal tax ID, social security number if you're sole proprietorship, an employer identification number if you are a general partnership. Sole proprietorship is just where you start doing business. A partnership is like if Lucy Pickleberry and Bobby McGee get together and say, hey, let's together sell lemonade. By default, they're called a general partnership. They don't have to do anything with the state. They don't have to file for anything except one thing, and that is an EIN. And that's not the state level, that is at the federal level. Because if they're a general partnership, that's one company. How do we decide which tax ID to use? Is it Bobby McGee's social security number or is it Lucy Pickleberry's social security number? Well, they have to file for an EIN, and therefore that EIN now identifies that company to the IRS, but it's still pass-through income. If you are in partnership with someone and you're doing business together and you didn't open an LLC or a C corporation, your liability is high, okay? You're very liable. It's not limited. Someone sues you, they can take everything you got if they win. I mean, literally everything. It's crazy, I know, but it's true. If you were just doing business with someone, by default, you've become a general partnership. You don't have to file with the state for it. You do have to have an EIN.
Okay, so the only difference between a sole proprietorship and a general partnership is that they're more than one person.
Boom. Right? There's 2, 3,
only
or 4.
Only 2? Or it could be 2 or more?
It could be 2 or more.
Gotcha.
Great question. A limited partnership is where you have what are called silent investors or limited partners and general partners. A limited partner means they're a silent investor, as in they donate money to the cause, they put money into the business, but their liability is limited because they don't make decisions for the business. Typically, the general partners do. So the general partner has control over the company. Even though the limited partner, also known as the silent partner, and the general partner are both receiving money, it's the general partners are the bosses of the business, not the limited partner. I don't know how familiar you guys are with angel investing. I talk about it a lot because I find it fascinating. They will invest in a company. They're not running the company, but they invest in it. And if that company grows by 10 times, and let's just say they owe 1% of the company because they invested, that 1% grew 10 times. Those payouts are huge. People who invested Uber, people who invested in Airbnb, like all these companies, they did really well because these companies grew huge. They weren't running the company, and therefore their liability is very limited because they're not responsible for any dumb decisions that those companies may have made. If you are a limited partnership, you also need an EIN. Again, why? Well, how do we identify the company's tax ID number? If you're a sole proprietorship, it's obvious. Use your social security. But if you're more than one people, you need one number to identify the entire company to the IRS. Keep in mind, in a limited partnership, even though the silent investors have limited liability, the general partners don't. And it's still pass-through income tax. Every person who receives their money, let's just say each person made $20,000 in the last month, they all pay taxes on their income tax as well as self-employment tax, which I will explain as well. So we got sole proprietorship, we talked about that. We got a general partnership, we talked about that. We got a limited partnership, we talked about that. Now let's talk about a C corporation. People get really confused. Now, the reason I put S corporation on here as well is because you need to understand it, but people think you can just go out and open an S corporation. You can't. You first have to open either an LLC or a C corporation. Then you fill out a form and apply for S corporation status, which means even though your company is a limited liability company or a C corporation, you are taxed with S corporation status. The letter S comes from a part in the rules on that.
So S corporation is not really a company type. It's just a tax status.
That's all it is. It's a tax designation.
It's what it looks like to the IRS.
Exactly.
Right?
So people get confused. They think, oh, I'm an S Corp. Well, you're not really an S Corp. You're a C Corp, or you're a limited liability company being taxed with what is called S corporation status.
Okay.
And there's a huge advantage to this, and I'll explain to you why. If you're a C corporation, do you know that every penny that company makes, they pay tax on twice? Let me explain. And then you're going to understand why people like the S corporation. Let's say you're a C corporation and you make $100,000 in a year. And you have two shareholders, owners, okay? These are their owner shareholders. They own the company. And so one of them is going to receive $50,000 and the other one receives $50,000. Well, before the company even pays the two $50,000s out to the shareholders, they pay corporate tax rate on that. When Trump became president, he reduced the corporate tax rate like crazy. I forget the actual number, but a lot, which companies were very happy about because that helps the business. But even though you're paying taxes as a company on that profit as a company, when you pay it out to your shareholders, they also pay tax on that. Double taxation. Isn't that exciting?
Oh, man.
Now, there are advantages to a C corporation. If you want to go public, if you want to raise investors, you have a lot of flexibility. So there are huge advantages. If you're a C corporation or a limited liability company taxed as an S corporation, you don't have to worry about double tax. Because technically, the S corporation as a company, in all normal situations, there's always exceptions, doesn't pay any company tax. There's no corporate tax. So we got Bobby McGee, Lucy Pickleberry. They're both shareholders for a C corporation that is taxed as an S corporation, okay? It makes $100,000. The S corporation doesn't pay tax on the $100,000. What happens is $50,000 is paid to Bobby, the profit, $50,000 is paid to Lucy, the profit, and they pay tax on that, income tax. See? So in essence, you are saving money by being taxed as an S corporation. Okay. So you could be a limited liability company, reduce your liability. You just fill out a form, and it's best to do it, put your starting date at January 1st. It makes things so much more simple for your CPA if you don't want them to take your head off. And you file for S corporation status, and now you end up paying less in taxes legally. I'm talking tens of thousands if you make a lot of money because of your S corporation status.
Okay, I'm a shareholder for my shoe shop.
Right.
My online shoe shop. And I am a C corporation taxed as an S corporation. And my salary, I just reduce it to $20,000 because I want to make the taxes as low as possible.
Yeah.
Can I do that?
Can you reduce what to $20,000?
Can I reduce my salary to $20,000 so that I have a low tax rate?
Great question. That's the reason they'll become an S corp. Is to say, since and let me explain what's behind this question. It's such a great question. If you own a company or if you work for yourself, I don't care if you call it freelancing, sole proprietorship, limited liability, shareholder, doesn't matter. When you receive income in the US, two kinds of tax you pay. You pay income tax, always to the federal government, sometimes to the state, depending on what state you're in. Texas, they have no income tax. California, they got income tax. Okay, that's one of the reasons I like living in Texas. There's another kind of tax you pay. It's called FICA, F-I-C-A, also known as self-employment tax, also called payroll tax. What it means is your 15.3% of your income is going to be taxed for Medicare and Social Security. Technically, you're taxed on two different things. Your income you make, as well as your self-employment tax, Medicare and Social Security. If you receive money from your S corporation status as a distribution instead of as a salary, also known as compensation or a bonus, you don't have to pay self-employment tax. Now to your question. If I'm making $100,000 off an S Corp status company, why don't I reduce my salary to $20,000 and the rest of it be paid to me as a distribution?
So that's not taxes.
So I don't have to pay the self-employment tax. Because you don't want to go to jail. The IRS says, and I'm quoting them verbatim, you must have a reasonable salary if you are taxed as an S Corp. What are you talking about, Seth? In other words, if I only receive $20,000 for my salary, so I'm only paying 15.3% for self-employment tax on the $20,000, and let's just say I made $100,000, and the remaining $80,000 I'm receiving as a distribution, the IRS is gonna say, Seth, $20,000 is not a reasonable salary for living in Austin. Therefore, we're going to count the other $80,000 or a good portion of it also as a salary, as compensation, as bonus, okay? And you're going to pay self-employment tax on that as well, plus the fees, and maybe you go to jail as well. So you have to be careful. Make sure if you're taxed as an S Corp that your salary is reasonable for the industry that you're in. Make sure that what you're receiving, the money that's coming in, is suitable for the industry as well as for what it costs to live in the area in which you are located. If you live in New York, you need a much bigger salary than if you live in Texas, pretty much anywhere in Texas. If you live in San Francisco, you need a much bigger salary than if you live north in, let's say, Redding, California.
So just to be clear, if you're taxed as an S corporation, there's the compensation or salary that each shareholder receives, which must be a reasonable salary.
Right.
And then the net income of the company is also taxed, but only as self-employment tax. Is that right?
Only as income tax.
Income tax.
Yes.
Okay.
So if you are taxed as an S Corp, you typically call it a distribution. If you put money into your company, it's called a contribution. If you take money out of your company, not as a salary, but like as a payout for the company profits, you call that a distribution. Like when you distribute money to your 401k, or when you distribute it to your bank account, like, I got this money. That is a distribution. You do pay income tax based on the tax brackets, right? The more you make, the more percentage they pay you, and that's another fun argument as well. And we get into politics and it's awesome. But you don't pay self-employment tax, which is broken between two things. It's Medicare and Social Security, and combined, it's 15.3%. Now, I'll just add something for fun because it's nerdy. Currently today, once you are making up to $137,700 of income, you will be taxed the Social Security version of that. But for $1 over that, you don't pay Social Security. There is a cap on Social Security tax. There is no cap on Medicare tax.
Oh, gotcha.
If you're a sole proprietorship, your federal tax ID is a Social Security number. If you're a general partnership, your federal tax ID is an employer identification number, also known as an EIN. Limited partnership, C corporation, S corporation, limited liability company, all of these are EINs with one exception. If you open an LLC as a single member, you do not by default have an EIN, and technically you don't need one. But if you bring on another member, you do. Now, a lot of people will do it anyways. You have to apply for an EIN. It comes from the IRS. LLC status comes from the state. EIN comes from the IRS. You go online, you apply. Before COVID, it would take just a few hours to get it. After COVID, it's like 5, 8, 10 weeks. It's pretty crazy. It's nuts, right? I'm hoping that it'll come back down and speed up again. But the reason you need an EIN if you are a 2 or more member LLC is because, again, how does the government identify your company? Every one of you has your own Social Security number. But if you're a single member, it doesn't matter. You can have a Social Security number. You still have limited protection, the limited liability company protection. So now I'm going to go over something else that's really important. I want to talk about ownership. Let me share a little tip with you. And I learned this from Tom Wheelwright, the CPA for Robert Kiyosaki. Again, their team does our taxes. So again, I'm not saying that to name drop. I want you to know, like, this stuff, it's awesome and it works. And we know this because we're in 3 industries right now. We're in real estate, we're in FBA, Amazon, and we're also in coaching. And we are also looking at something else, which I'll share with you guys later. When you open a company with someone else, if you are the main person doing the work, it's important that you maintain control. In fact, maintaining control is more important than having a majority of the profits. Trust me on this, it works, because when those conflicts come, and we've been through plenty of them, the one who has control is going to be able to steer which way it goes. And I'm talking about legally on paper. Now, obviously, as much as possible, you want business partners you can trust because it's like a marriage, but you will run into bumps along the way, I promise, if you do it enough. Ownership, if you're a sole proprietorship, you're one person and you own your company as one person. If you're a general partnership, that means, as we said, 2 or more, then you have multiple partners own the company. If you're a limited partnership, same thing, you're gonna have 2 or more partners. Now, in that situation, you could have one general partner who owns everything, and the limited partner just is a silent investor, and that's possible as well. If you're a C corporation, you call it shareholders. If you're being taxed as an S corporation, you also call it shareholders. And if you're a limited liability company, you call it a single member or multiple members, also known as partners. So if you fill out the LLC form with your state, they're literally going to call it members, and you just have to decide who or which people are the controlling members. They use the word member instead of owner. It confuses people, but I want to let you know. If you're setting up as a sole proprietorship or a general partnership, it's usually $0. If you're setting up as a limited partnership or a C corporation or an S corporation tax status, which is attached onto that, or limited liability company, it's going to be anywhere from $50 to $800. Please keep in mind, I'm not against LegalZoom at all, but I want to tell you something you need to know. LegalZoom will charge you out the wazoo for silly stuff like applying for an EIN. Don't ask them to do it. It's so easy. You go online, you fill out a form, it takes you maybe 120 seconds of your life. Like, they don't need special knowledge for that. Of course they're making money off you, but don't use companies to do really dumb stuff for you. It's easy. However, when it comes to saying we need a company agreement, we need someone to file for us, we need someone to handle the franchise tax if there is a franchise tax based on the state, that's where it does make sense to get a company like LegalZoom or just hire your own personal lawyer who specializes in business.
Because that's worth your time. Now it's talking about multiple hours,
Exactly.
and you don't want to become an expert in everything.
Exactly.
You just want to learn the basics,
Right.
and then outsource everything else so you know how to manage it.
Exactly. And I think this is one of the mistakes Josiah, a lot of new business owners make is at the beginning, they want to become an expert at everything. You need to decide.
We did too.
Yeah, we did too. We still struggle with this sometimes. Do you want to make money or do you want to spend all your time just becoming the expert at everything? You literally can't do both well. I mean, you go to any smart businessman or smart businesswoman, they're usually really good at one or two things and everything else they suck at. The one good thing they know how to do though is they know how to get work done through people. They know how to find the right people, hire the right people, and work through them. In fact, a large part of your time as you're a growing company will be spent finding the right people because people are the most amazing thing in the world. I believe people are eternal. I do. I also believe people are the most complicated things in the world. You agree? Mm-hmm. And I also believe they can be the most heartbreaking. It's hard for your neighbor to put you into a status of weeping, but your spouse could, even your business partner could. Why? Because you're so close. You do so much together. Understand, as your company grows, you need to be willing to let go of control and trust people with tasks. And there is an incredible joy in collaborating with people and letting them help you in working together. It will just, I'm telling you, you will go so much further. And hire people that are smarter than you. If you are insecure and it's hard for you to have someone who's as good or better than you need to get over the insecurity. You know what Henry Ford did? People started criticizing him. It's funny, everyone calls him a hero today. Back when he lived, he was criticized like crazy. And these reporters came in and they said, you know what? We just think you're a scam, you're a fraud, we don't believe in you. And so we want to test your knowledge. I was like, sure, go ahead. And they started asking him this random questions like, explain to me and I don't remember the exact question, but something about chemistry. He's like, sure, no problem. He picks up his phone and he calls his chemistry guys. He's like, there you go, puts it down. And they said, okay, well, explain to me how, and they would ask him a financial calculation having to do with profit and loss statements or accounting. He'd pick up his phone and he'd call his expert in CPA. He had an expert for every different division of his company. And instead of him saying, I got to know everything, he relied on them. That was a smart man. No wonder he's a legend today. To set up a sole proprietorship is easy. Listen, guys, there is nothing wrong at all when you first open your Amazon store or whatever business you're doing to start a sole proprietorship. Chances of someone suing you is like 1 in a trillion. Maybe that's an exaggeration, but you get the idea. I've seen people that are like, oh no, I can't be a sole proprietorship. I have to be LLC. And I'm like, why? Like, because what if I get sued? Like, listen, no offense, but when you're starting off, no one cares about who you are. No one cares.
Yeah.
Like, there was a day when no one cared who I was. No one cared who Josiah was. No one knew, and we didn't care. We just kept hustling because we wanted to make money. Chances of getting sued were so slim, it was ridiculous. You can move into an LLC status, especially if you have a high-risk product, once you start making more money to help protect your assets and all the time, blood, sweat, and tears you put into building this newborn baby, now growing into a teenager to an adult, called your business. Now, what about a limited partnership? Ease of setting up is moderate. You do have to apply for an EIN. You have to have a company agreement that explains the limited partner role and the general partner role. For a general partner role, you're not required to have a company agreement. The purpose of an agreement is to think of the worst case scenarios and align with that person on what to do in case it happens. Company agreements don't have a lot of value in a court case. Just like every married couple is different, so every business partnership is different. You need to have very clear set expectations on exactly who is supposed to do what, and in the worst case scenario, how will you handle that situation? For example, what if your partner's name is Bobby again, and he wants to take $100,000 out of the company? And you're like, no, we need that $100,000 to buy more products. I want to grow this thing. And he's like, yeah, but I need this because my daughter, she's in debt and I want to help her out. Okay, now you have a problem. Now you have a conflict. You should have talked about that a long time ago.
Gotcha.
Okay.
So the company agreement is to set expectations with your partners.
Yes.
Correct? So do I need to set that up with the Secretary of State or the IRS? Do I have to submit it to them in order to get my company set up?
Great question. And you don't. You do not have to send your company agreement to anyone unless you're applying for a loan or you're doing something to do with some other organization that needs to vet you or make sure they understand how things are going. So that company agreement, yes, you need it because if you are audited, if you ever end up in court, you need to show them, boom, here's my agreement, here's what we decided. But you technically don't have to post it anywhere. You have to have it, but it's not like you upload it to some file or something. Great question. So for a limited partnership, setting it up is moderately hard. For a C corporation, it is hard. If you want to be a C corporation, the only time it makes sense is if you're going to go public, you're going to do seed funding, A funding, B funding, all that good stuff, and you're going huge, then being a C corporation will give you massive advantages. And by the way, the double taxation thing, it's not as bad as it sounds. I'm going to explain to you why in a minute. Then when you get to ease of setting up for a S corporation, again, this is a little misleading. You don't technically set up an S corporation. You set up an LLC or a C corporation, then you can apply for S corporation tax status so that all the income is pass-through tax and you pay self-employment and income tax on that money versus having to pay for it twice. And if you set up a limited liability company, it is moderately hard. It's not that hard, but there are some steps you have to go through. Let's talk about personal liability protection. Which ones give you liability protection? With a sole proprietorship, you have zero liability protects for debts and liabilities. With a general partnership, the same thing. You have no liability protection. With a limited partnership, only the general partners are liable. So if you're a general partner, which means you control the company, you are liable. Your personal assets are liable. The limited partner, not the case, because they're not running the company. Remember, the limited partner is not the boss, the general partner is. If you are a C corporation, the corporation is liable for debts and liabilities. However, the shareholders, the owners who own the company, their personal assets are protected, and the same is true for a limited liability company. Now let's discuss taxes. Now, you guys are gonna think I'm insane. Maybe I am. The other night, one of my kids, she looks at my wife and she's like, what is wrong with him? They all started laughing because I'm a little crazy when it comes to taxes. I love taxes. I have learned to absolutely love, I think taxes is one of the most fascinating topics on planet Earth. I used to hate them with a vengeance. Now I think they're one of the biggest opportunities for humans who live in the US. And I'll explain to you why, my friends. If you are a sole proprietorship, for every dollar you make, you will pay at least 2 kinds of taxes, maybe 3. I'm speaking to US citizens only right now. You will pay income tax. In other words, if you make $100, a percentage of that will go back to the federal government. Well, not back to it, but you gotta pay them. You will also pay self-employment tax. This is why if you're an employee, do you know you still technically pay FICA? It's more the employee perspective of self-employment tax, but you only pay half of the 15.3%, whereas your employer pays the other half. Look, if your employer, let's just say your employer is paying you $50,000. They're not just paying $50,000. They're paying for half of your self-employment tax. So for every $100, half of the 15.3, which is 7.60 something, I forget. You get the idea. Half of that 15.3, they're paying. It's that money that comes out of your check, they're paying half of that. That's an advantage of being an employee. Your tax liability actually is reduced because of it, so that's nice. Going back to sole proprietorship, you will pay income tax, you will pay self-employment tax, and if you live in a state that collects income tax, like our good old friend on the west side, California, you will also pay income tax to them as well. I know I'm hard on California. I lived in California like half my life, but I just think their laws suck.
Beautiful state and ugly tax regulations.
But man, even their sales tax sucks. I'm telling you guys, if someone was trying to make it as complicated as possible, go look at California sales tax. It's unbelievable. Anyways, I'll stop. Okay. Now let's talk about a general partnership. If you're a general partnership, let's just say myself and Josiah are partners, a general partnership. Again, we're both actively working. We both control the companies that we run. We each individually pay income tax and self-employment tax on our income. Because we live in Texas, there is no state tax. Now let's say you're a limited partnership. Now this is where it gets really interesting. If you're a general partner who has control over your company and you make the decisions and you're running the company, whereas a limited partner doesn't have control and they don't run the company, the general partner will pay income tax and they will pay self-employment tax. But the limited partner only pays income tax unless they're getting consistent payments regularly, which the IRS would say, that is income, that's compensation, that's salary, that's bonus, all kind of the same thing. Okay, if you say compensation, you can say that's the general category for salaries and bonuses. That's what compensation is. If it's a predictable, consistent number, that looks like compensation. You will also have to pay self-employment tax even as a limited partner. But if you're a limited partner and you're just getting company profits, like for every $100, you get $5 because you get 5% ownership, obviously it's gonna go like this, right? No company makes the same money every month. Then you're fine. You're only gonna pay income tax. You're not gonna pay self-employment tax. You will save 15.3%. That's the joy of being an investor in companies and in real estate, is there's a lot you don't have to pay. And this gets so fascinating when you compare real estate with a coaching company with Amazon FBA. Like, it's utterly awesome.
So a limited partner is essentially a passive investor because they're not actively managing, they're not actively doing anything in the company.
Just like becoming a real estate investor. If you buy a house and you rent it out, you are technically a passive income entity. I laugh when people say there's no such thing as passive income, you have to work. Of course, everyone knows that. Like, people aren't dumb, they know that. But the IRS considers it a passive income entity because for the most part, you're not really doing work to make money. You made the investment, you manage the tenants, and that's it. It's passive income. You're getting that check every month. That's pretty darn passive. But if you start an Amazon FBA business, there's nothing passive about the beginning of that at all. Eventually it becomes more passive as your products take on life, and that's where you can grow a lot of money, but that is called an active income entity. I'm resisting the temptation right now to talk a lot about that because we could go down that road and it is an awesome road. Let me continue here about taxes. You ready? I think that what I'm talking about now, this is the most important part of the whole thing. Guys, if you understand taxes, here's what a lot of business owners do. They go, CPA, they must be smart. They do the same thing with lawyers. Oh, he's a lawyer, he must be smart. No, that doesn't mean jack, okay? Like, it does not mean they're smart. It doesn't mean they know what they're doing. Do you know how many CPAs I had to go through until we got the CPAs that do Robert Kiyosaki's taxes to realize, oh my goodness, the stuff that they were not telling me and teaching me and showing me, I could have saved literally hundreds of thousands of dollars if I had the right CPA. So just because they got a degree doesn't mean jack. Go vet the heck out of these guys. I'm serious. You got to understand if they know this stuff. We learned it so we can ask the right questions. And that's why I'm giving this to you for free. So enjoy. Here we go. Back to taxes, humankind's favorite topic in the world. If you're sole proprietorship, you pay both self-employment income tax. If you're general partnership, same. If you're limited partnership, the limited partner, as a general rule, only pays income tax, but the general partner, who controls the company, pays both income and self-employment tax. Now let's talk about a C corporation. This is where it gets so interesting. Now check this out. Let's pretend you're a C corporation. In a C corporation, all the members are called shareholders. Let's pretend it's good old Bobby McGee, our friend down the road, and Lucy Pickleberry, the legend. They are 50-50 owners, shareholders of a C corporation. They make $100,000 in 1 year. Profit, okay? After all your business expenses and tax write-offs, and I'm assuming you guys are doing that because it's so important, it'll save you money, my friends. After all those costs are gone, their net profit is $100,000. Okay, we got this money, now what do we do? What is the current C corporation tax rate? What is it?
It's about 20.
It's 20 something, 22. Yeah. President Trump brought it down like crazy, which was really nice. Your company will pay that corporate tax rate, okay? You will pay it. If Bobby McGee's here and Lucy Pickleberry's here, the question is, do they receive their payments from the C corporation as compensation? In other words, salaries and bonuses? Or do they receive their money as what is called a dividend? Remember we talked about an S corporation, if you take out money, what is it called? A distribution. If your C corporation, as a general rule, it is called a dividend. It's not compensation, dividend. It's still money in your bank account, like it's still cash. There's nothing special about the dollar. What's interesting is if you were paid as a dividend, you do not pay self-employment tax. Now you see where the C corporations are going. You only pay income tax. But if you receive that money as a salary, compensation, bonus, all in the same category here, you don't just pay income tax, you also pay the 15.3% self-employment tax. Now you might be thinking, oh, well, that makes sense. If I'm a C corporation, they'll always receive dividends. Hold on. The C corporation, when they pay out compensation, the 50 and the 50, they can use that as a tax deduction off their corporate income. So if their corporate income was $100,000 and all of that is paid out as compensation, that compensation is a tax deduction against their corporate income, which reduces their corporate income tax rate drastically. Now, you see this as like there's a pros and a con on each side. If you're receiving compensation, yes, you pay self-employment tax, but your corporation, their tax liability is reduced because that is a tax write-off. It's a tax deduction. You follow me? Making sense? But on the other hand, if Bobby and Lucy receive the money as a dividend, although they don't pay self-employment tax and they do pay income tax on the 50 and 50,000, that cannot be used as a tax deduction off the corporate income. Now you see why I love this stuff? I just find it so fascinating.
So let's say, I have my shoe shop, it's a C corporation.
Yeah.
And it's taxed as a C corporation. Let's say I have one employee and I pay compensation to them. What happens to the rest of that money? Let's say I have $50,000 of net income in the bank at the end of the year.
As an employee
taxed at all?
Or as a shareholder?
As a shareholder.
And it's taxed as a C corporation?
It's in the business bank account.
Got it. And you're taxed as a C corporation? Mm-hmm. Got it. So from the $50,000, if you receive that as a salary, like you're being paid for the work that you're doing, then you will pay both income tax based on your tax bracket, and you will pay 15.3% of your money will also go to the government for self-employment tax to cover FICA, also known as Medicare and Social Security.
Okay, so let's say I have $50,000 after I paid myself.
Right.
Is that taxed at all? So I have $50,000 profit and it's after paying everyone.
So you're a shareholder.
Right.
Gotcha.
Yeah.
So you have $50,000 left over, then that is a dividend and you don't pay self-employment tax. So you could receive some money as compensation and you pay income tax in self-employment, and other money is dividend and you only pay income tax, not self-employment tax.
Okay, so just to be clear, even if I don't put that money anywhere, if it's just sitting in the bank account at the end of the year after I've paid everyone their salaries,
it gets taxed.
It's still taxed as a dividend, even though I didn't take it out.
Exactly.
Okay.
Look at it this way, guys. Any money you make is taxable, period. The question is, what do you do with it? What's your business structure and where do you put it? If you took that money and said, well, I'm going to put it into real estate, you would not get a tax deduction on it unless your real estate company is an active income entity versus a passive income entity, which would require you or your spouse to be a real estate professional. That is not the same thing as a real estate agent, which means you're doing a minimum of 750
something like that
hours per year of real estate work, and therefore it can be used as a tax deduction against your shoe shop.
Or a more simple solution would just be to invest that remaining $50,000 back into marketing or back into investing in your office.
Exactly.
That way,
you
didn't actually make any money because you invested it in business expenses.
Right. And the day's going to come, guys, where you're going to make so much money, you're going to go, I do not like having all this money. I know that sounds silly, but it's true, because so much of it is going to go right back to the government. So what do? You do something legal. You take the money and you reinvest it. Like you said, you market your company, you grow your brand, you get involved in real estate, you do other things so that at the end of the day, you end up keeping more. It's like what Kevin O'Leary said, and it was so wise when we were at his condo beach house in Florida. He said the most important thing is not how much money you make, it is how much money you keep. Now, back to the taxes on this. Now that you understand C Corp, the difference between a C Corp and an S Corp is with the S Corp, there is no corporate tax. It's all pass-through income. But here's what you need to know. You have to be careful. If you're a C Corporation and you pay out your shareholders in dividends so they don't have to pay self-employment tax, but those shareholders just so happen to be officers in the company, or on paper you have no officers, the IRS will count that as compensation and require you to pay self-employment tax. Because they'll say, you're just trying to get around, you're just trying to swivel around it. If you're actually doing work for the company and you're getting paid, it's compensation. Now, a portion of it could be salary, a portion of it could be dividends, and that's fine. But just keep that in mind. You have officers in a C corporation. A CEO is an officer. That's why they call it a chief executive officer. A COO is an officer, a chief operating officer, and so forth. A CMO, a CTO, a COO. There's so many O's now, it's hilarious, but you get the idea. These people are working for the company. If they get money, the IRS is going to count a good portion of that as compensation, which means they have to not just pay income tax, but self-employment tax as well. Now, could they also receive a dividend payment? Yes, but the typical shareholders in a company who aren't doing work, they are receiving dividends only. So just keep that in mind. Limited liability company, how do they do taxes? Just like a sole proprietorship, just like a general partnership, just like a limited partnership. It's all pass-through income. What does it mean? Again, the money passes from the customer right through the company as if it didn't exist, right into the person, and the person is liable to pay taxes on their income tax. That's how the IRS views it. It is perfectly fine to start as a sole proprietorship. There's nothing wrong with it. I think they get a bad rap. I don't think it's fair. You can start there. Why not? And then as you make money grow, you know what a lot of people do? They think, oh my goodness, I gotta have everything set up perfectly. I need my LLC, I need my EIN, I need the suppliers, I need the products, I need the research, and I need my insurance. And I'm going, you're crazy. Go make money. Go out there and start selling products, even if you have to go on the street. You know what I did when I started selling on eBay, when I would have products that wouldn't sell? They wouldn't sell on eBay. I wasn't selling on Amazon yet. You know what I did? I picked them up in a bag. You remember this? I walked door to door in my neighborhood and I sold it to my neighbors. And sometimes it would align really well with my daughter's fundraiser for her band. So she would go with me and together we would do a double deal. You see what's going on here? I just decided I needed to make money.
Right, do arbitrage to make capital.
I wasn't sitting down thinking, should I get an offshore company? Oh, what am I gonna do about subpart F? You know, I wouldn't even think about that. So I'm giving this to you guys so you have the basic knowledge, the background, so you can grow a company as you make more money. But at the beginning, your company is a newborn baby, and if you do not feed that baby will die. You must treat it like a separate entity in your mind. All of this are tools to help you make wise decisions so that you can grow. And as a result, you will succeed so much more, and you can have margin to do the things you love with the people you love. Guys, if you enjoyed the video, make sure you subscribe and like. I have a question for you. I want to know, what business structure are you using for your company? Post it below. I personally will respond. You guys have an awesome day.